Michael Burry of The Big Short movie is the famed investor who made his name by predicting the housing collapse in the 2008 economic crisis is taking back his previous advice. His previous advice in January of this year was simply sell, as he was bearish on the stock market at the time. But this week, Burry tweeted to his 1.4 million followers that, quote, "I was wrong to say sell." Apparently, buying the dip in 2023 is turning out to be quite profitable. Burry frequently deletes his cryptic tweets, so it can be tough to pin down exactly what he's talking about. And I follow Burry and others, and at the time I thought the tweet was odd since Burry did sell stock, but he kept several stock positions and even did some buying. For me, if one was going to sell, it was when the fast line crossed down through the slow line in the old monthly chart. And before the crossover, I specifically said in the weekly update at that time that it was a probability that it would cross over and that it was time to save cash. And from that moment and even till today, I've generally kept that advice. So, don't listen to the crash bros. Watch the charts. The charts don't lie. So now we're taking a look at the 20-year monthly chart on the spiders, the SPY, and let's go back to see what I was talking about. Remember, in late 2021, the chart was starting to roll over. Now, it was relatively easy to see when you go down and take a look at the MAC. Here it is. It was having difficulty in the climb up to this point and definitely rolled over. The fast line was coming down, and I was saying there was a probability that it was going to continue on down through the slow line. There was a possibility of a reflection on up with a double top, but of course that never turned out. So once the fast line did go through that slow line, that was time to save cash. I didn't tell anybody to sell. That's your decision. For me, down here, is it time to buy? Well, that's your decision. What I see here is a bottoming and basing. I don't see anything unusual other than the fact that the stock market is taking its time, but so can we. There's a separation between the fast line there and the slow line here, which means we do have more sideways trading and volatility. But going through these oscillators, such as the histogram, definite improvement there. Price rate of change, same thing, but we have a bit of sawtoothing going on, so the fast line here needs to turn up and through, but definitely when you take a look at the RSI, it's struggling on its way up. Stochastics is on its way up, and then so is the Williams. They're taking their time, but things are improving. One last look at the price chart, and let's now go to the weekly charts. And we're now looking at the 2-year weekly chart on the spiders, and we can see the bottom and basing beginning here and moving on up. Perhaps this October low is going to be the absolute low, because definitely we haven't seen a breach below that 375 in a number of months. But remember, we have this channel moving up through here with the bottom channel line there and then the top channel line moving up through like that. Now, for this to continue, we need to get above this previous high, and this previous high. So there's a lot of struggle that needs to occur on the way up because there's plenty of resistance. But we need to move on up to this top trend line, and we'll see where we go from there. But right now, it is a struggle. So keep your eyes out and be cautious. Moving down into the oscillators, definitely volume is looking better with higher levels. Now into the MAC, this is a bit of a concern for me. We've had, let's see, this one attempt here, 2 attempts there, 3 attempts here, and we're going for a 4th attempt, and it seems to be weakening on the way up. And you can see that weakening when you take a look at the histogram. For one, this high here is higher than this level, and definitely higher than this level, and so far higher than this level. So we do have, say, this downward trend line moving like that. So things are weakening, but just keep your eye on that. It's not too significant. It is a signpost that you want to pay attention to. Here, it does look a little bit stronger in the price rate of change. We're moving on up above that 0 line and trying to head up to that 50 level where we were here. So we definitely want to see if we can get up there. Now, down into the RSI, we're at a moderate 59.88, but we still seem to be within this channel, those lines through there, and more or less through there like that. We need to break out of that and into that overbought territory. It needs to make a strong move before I'm going to say that the market is turning. Here into stochastics, pretty much the same thing. We did have this rollover here, and we did this bottom basing here with the move on up with the fast line coming through that slow line there. But this can always turn into kind of a reverse, or excuse me, a head and shoulders on its own if the fast line comes up here and then decides to turn back down, and then that would be bearish. Same thing here in the Williams. You can see that this point here, say in August, through the current time frame, is declining. It shows some denigration in the power of the Williams. Back on up here to the price chart. Alright, so I'm not saying we're in a bull market, but I'm not saying that we're in a bear market trap either. What I'm saying is just be cautious. Now, one thing that you can do, and which is very prudent, is to average in your buying, because you may be a genius in a year or two from now. So be cautious, average in if that's your game, and always trust the charts over the pundits. And for today, that's ChewDog Charts. Thank you.